Another rebalancing and another bloodbath. Let's assess the damage not only on the PSEi but on the S&P 500 as the Trump tariff saga and his shouting match with Zelensky has confused and panicked even the US markets. Let's discuss. My name is Dan Slim and welcome to another episode of Monday Market Outlook. Let's continue with the earnings results from last week from our favorite companies. Manila Water, our favorite defensive stock, up 88% in terms of their full year income to 10.5 billion. More importantly, dividends were declared 1.841 per share, which represents a 6.1% yield. Not only that, PLDT also announcing a 47 pesos per share dividend for a total of 97 pesos trailing 12 months yield at 7%. What a good time to be investing in dividend stocks. Not only that, Meralco 22% year-on-year improvement on their net income, 44% in the fourth quarter alone. Very healthy numbers from most of the companies, even MegaWorld 8%. SM 7% net income improvement with the SM retail segment up 30%, which just shows that the consumer segment is alive and well. Of course, the board has approved the 60 billion share buyback program, which will be good for SM's price action. China Bank all-time high in terms of revenues. BDO also loan growth 13%, net interest income growth of 17%. Interest income growth for China Bank also at 19%. So very great numbers from our favorite companies. But despite that, the index rebalancing resulted into a bloodbath last week as most of the stocks pulled back. I mean, look at URC, JGS 7%, 9%. How low can you go here? But congratulations to BDO holders. BDO, PNB up 7%. Pure Gold and CNPF managing to bounce back from a sharp sell-off. And as early as now, people are already talking about another rebalancing, and I'm not even talking about the FTSE rebalancing, which will potentially add Plus and RCR. But as early as now, people already talking about the PSE index rebalancing this August. And based on current projections, Plus currently ranks 20th in terms of the VWAP and market cap. And as long as it's able to maintain the 36 price range, it should be a shoe-in for the index. Unfortunately, at the expense of Bloomberry, right? So just a quick note on how the index rebalancing works, right? The index is composed of 30 names, and it is not enough that you become 29 or 30 as what happens here with RCR and 7. You don't enter the index just because you're 29 and 30. You have to rank 25 and above, right? So AREIT and China Bank was able to enter the index last time because they ranked 25th and above. So Bloomberry is now at the index exclusion threshold at 36. And the only way for Bloomberry to save itself is for Bloomberry to average 520 in the next month, which is a tall order because I mean, Bloomberry right now is just 319. So unfortunately for Bloomberry, it looks like it's the end of the road of Bloomberry in terms of it being an index member. So let's look at the PSEi charts for this week. PSEi suffered a bloodbath last Friday with the index actually pulling back to 5,997. Even TradingView, it was so ugly that TradingView didn't even want to complete the red candle here. But despite the sell-off, the market still managed to stay within the consolidation range here at 6150 and 5,930. And while we've had consolidations before like this one, this is the first time the market has breached the downtrend line here, which signals a more reliable basing pattern this time around. So hopefully as we recover from major rebalancing disruptions, investors can now focus on bargain hunting this week. Now, which stocks am I looking for to buy this week? AC, good basing pattern here despite the sell-off. Here, AC could bounce back to the support level here, this could probably be a good time to pick up some AC shares. Again, don't be too aggressive. It can still go down. There's no guarantees that this is it, right? I'm picking up some SM despite the breakdown here, hanging on to dear life. This could be artificial and we could see SM forming support here. Hopefully it makes its way back to 826. I will wait for SM to go up to 789 before buying in. Of course, I will still be avoiding the likes of AEV, JGS, AGI, etc., even GT Cap. But LTG, right, again, we got a buy the dip opportunity last week. Congratulations if you were able to pick some shares up. They should be announcing dividends soon in March if they haven't done so, right? So watch out for that. Ali and SMPH, I'm not getting Ali yet. A breakdown here means Ali could be headed to around 20 or even 1950, but SMPH, a 7% discount here, guys. 7% discount for a stock that's 3.2 standard deviations below its long-term mean. I'm picking up some shares of SMPH after a long time, right? AREIT and RCR, again, our best bets. AREIT up 4.88% last week. I mean, guys, every time it hits 39, set an alert. Every time it hits 37.95, set an alert. When it hits 37, set an alert. Buy Ali at these levels, right? RCR, every time it hits 592, set an alert. It's now at the previous high. Let's see if it forms a consolidation here. Maybe we could have a cup and handle formation happening here, and RCR could break out of 624, hopefully. Now, BDO also, a good rally for BDO. I will buy if it pulls back here at 146 and holds this support level. BPI also a good buy at these levels, maybe at the 200 EMA if it bounces back here. Metrobank also could be a good entry if it holds support here at 7160. Now, PNB rallying to 3240, a good entry for me if it pulls back here at around 31. PNB also announcing dividends, 276 pesos. I mean, that's 8.1% yield. I mean, again, what a time to be investing in dividend stocks, 2025. Now, gold pulling back to 2,850. I'm hoping it pulls back to 2,800 for a possible entry. Goldman Sachs has upgraded its gold price target to 3,100 for 2025. So still a bit of upside for gold left for 2025. Plus has experienced some volatility last Friday because of some regulation issues, but it is now at its support level. The first support is 3460, the next support is 3075. We've been waiting for this pullback to the 20 EMA, and this could be a good opportunity to buy into plus if you missed the boat. The average price target is 4010, but CLSA has upgraded its price target of plus to 55.40. Could be a good momentum play for this week. Monday at 7.55, I think, is also a good chance to enter here. This was previous support, gap fill here. Again, Monday, market leader in instant noodles, lucky me. They have an economic moat there. For long term, Monday is a great pick. Now, Keeper, one of our favorite momentum plays for this year and even last year. It is back at the 20 EMA again. The pullback in time at the 20 EMA presents a good buying opportunity for Keeper. Let's see. If it manages to hold this level, a good chance to buy for Keeper. Of course, our favorite, Aboitiz Power, rallying 7.4% last Friday. It could settle at around 4160. A hold for AP. Manila Water, 30 pesos. Again, set an alert if it goes down to the 20 EMA, 2940. A good chance to buy even at 28.95 is a good level to buy Manila Water. 6.1% dividend yield. Globe and Tel still at good buy levels, just accumulate slowly. on these issues. STI, also one of our favorite momentum plays. It is currently consolidating here. It could break out soon. A good place to enter here, 141 or 140, right? So the local markets could rally a bit on bargain hunting. Now, 2 months into 2025, it has been quite disruptive for the markets, and hopefully we can see things normalize a bit. Admittedly, we've been saying PH companies are fundamentally sound. They are at very ridiculously cheap levels. After 1 month, we're saying the same thing. PH companies are fundamentally sound, and they are at even cheaper levels than before. When is it going to end? Nobody knows. The markets do have a tendency to make even the smartest analysts look silly, right? But for now, the base building on the PSEi looks much more stable than before. And so far, our bets on the defensive and REITs are doing well for us. Again, a good time to build on your dividend stocks as yields are at their most attractive levels. Momentum plays like Keeper and Plus, LTG still working well for us. But start picking on some high conviction index names and slowly accumulate. Now, remember, be patient, right? If you've heard of the saying that that investing is really like watching paint dry, this is it. I mean, we're just watching for the blood to dry in the PSEi for things to happen. But right now, still no catalyst. So just be patient, guys. Just be patient, right? So on to the global markets. The US markets in a panic as the latest AAII sentiment survey pivoted to the bearish side on levels last seen in 2009. 60%, right? Since 1987, this has only happened 6 times. So the slew of tariff news has started to panic the market significantly. Last week, despite Nvidia revenues of $39 billion topping Wall Street estimates, the market has become numb to these consistent earnings beat, and there's really nothing new for Nvidia. The only surprise for Nvidia is for it to either earn much more earnings, which is much harder, or for it to surprise to the downside, which which is going to be very bad for the markets, right? The markets are already on edge as valuations have been brought into question, especially after the DeepSeek launch. Now, on the political side of things, as we reminded everyone last week, Trump tariffs will take effect this March as scheduled, but not before. Trump confused everyone with an April 2 deadline in the middle of the week, only for Trump to circle back to the March 4 deadline last Friday. So again, confusion, guys. Classic Trump. And amidst all of these, again, remember, Trump has only followed through on one piece of tariff legislation, which is the 10% tariffs on China. And since China didn't really react that much to that initial salvo, he is proposing an additional 10% duties on China on March 4, along with 25% tariffs on Canada and Mexico. March 12, blanket tariffs on steel and aluminum on producers around the world. On April 2, reciprocal tariffs could begin to come into effect on an array of nations. 25 tariffs on the European Union, no date yet. Unspecific tariff threatened on other sectors like copper and automobiles, right? So all this tariff talk has also pushed consumer confidence, notching its biggest monthly decline in 4 years. The consumer confidence numbers came in at 98.3 from the consensus, way below the consensus of 102.5, and also way below the previous number at 105.3. But at least on Friday, the Fed's preferred inflation gauge, the core PCE price index, hit a 7-month low in January, easing concerns of a price rebound. Healthcare services, which make up 19% of core PCE, was driving the slowdown. But despite this, market expectations for rate cuts is now pulled back as early as June. Remember, a couple of weeks ago, the rate cut expectation was pushed back to October, and it's now back to June. Let's look at the S&P 500 charts. The markets ended February with sharp losses as tariff moves weighed in, with the S&P 500 dropping around 2%. Now, On a weekly basis, the S&P 500 suffered its second straight week of losses, down 1.15% last week. We were able to fill the gap here at 5,850 before investors bought the dip and helped push the markets back up to 5,950 or 5,948. Now the options low sits at around 5,800, so we could still see some selling pressure continue well into this week. Now if 5,800 support doesn't hold, watch out for the next support level at 5,700, where the markets could be headed, especially as we are long overdue for the anticipated pullback into the 200-day EMA. At this point, let's look at the price action here, right? This looks much more like a consolidation here. You have a buying climax, you have an up thrust, and then you have an up thrust after distribution. This is a classic Wyckoff distribution pattern. We could be in for a deeper pullback in the coming months. Again, we are looking at 5,700 where the bulls could be sitting. When are we going to hit 5.7? I don't know. Maybe soon, maybe much later, but it's long overdue. The market traditionally dips into the 200-day EMA, so watch out for that. I'm a bit cautious on the S&P 500 for now. Maybe not a good time to enter the S&P 500, especially after Friday afternoon, where we saw a tense exchange in the Oval Office between President Trump, Vice President Vance, and Ukrainian President Zelensky. With cameras rolling, the US leaders criticized Zelensky as disrespectful and accused him of not showing enough gratitude for US support in Ukraine's conflict in Russia. Quite tumultuous times, no, for the US markets as we've decoupled from the US markets. Hopefully this week we could bounce back as investors get back to normal investing mode. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.